Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I want to talk about doing velocity banking, uh, paying off your mortgage with a credit card. So a lot of people say like, hey, can you actually pay off your mortgage with a credit card? The answer is yes, but it's not necessarily the ideal tool because you do have to use an intermediary, and this is the only website that I've used that will allow you to help pay a mortgage with the credit card. So I can just show you an example of mine here, where the first time I did it, I did like $100 test. I did it on December, right? And then, I saw that it was successfully applied to the mortgage. And then so I decided to do it one more time, put a $3,500 chunk. My credit card at that moment, I don't think I had a big limit, maybe about $10,000. And then the beginning of next month, I put another chunk, right? So it's definitely possible to pay a mortgage with a credit card using a website like Plastiq or Plastiq. I like calling it Plastiq, but I think the official name is Plastiq. So just a few things I want to mention regarding this. So first thing is that use the tool available to you. I had a bunch of credit cards, and because the credit card was the only type of line of credit available to me, that's what I used to do velocity banking and do my first chunk. So if you have no idea what I'm talking about, what velocity banking chunking is, go ahead and click the links down below to Velocity Banking 101 and 102. So they'll give you a better foundation of what velocity banking is about. And then come back here to figure out how can I pay off my mortgage or pay my mortgage with the credit card, right? So because the credit card was the only thing that I had, you just use it, right? You just use the tools that are available to you, and then you build up your credit or you find out your other options. And so later on, I was able to get a personal line of credit for I think about 15,000, Heloc for about 50,000. So I prefer to use the Heloc because it's the cheapest of the interest rates. And the biggest disadvantage of using an intermediary like Plastiq is that there are fees involved, although the benefits outweigh the cons when you kind of add it up. So back then, the fee I remember was 2.85% of the amount that I sent using Plastiq. So if you kind of take a look at this, actually it's this one right here, you can see that I sent this $3,500 payment to the mortgage company, and the fees are 99.75, so about $100. Now you may say, yeah, wow, that's a lot, but if it offsets the interest that I would have paid, then I would say it's worth it, right? So maybe I pay $100, but then I save thousands and thousands of dollars to interest. I would say it's worth it then. And another thing that you might consider is credit card benefits to offset fees, right? So some credit cards, I know they have like cash back and stuff like that. So even though you have like a maybe 2.85% fee, you can probably get most of back with the credit card. And they might give you like a 2% or a 1% cash back. Now, again, check with your credit card company to see if that's possible. Now, as of this video, the fee did raise from the last time I did it, so it's like 2.9% right now. So there again, there is a cost, but it's totally possible if this is your only tool. Now, again, there's good, better, and best, right? So good is credit card. It's good enough. If that's all you have, just use a credit card. Better is the PLOC, right? Because it's a lower interest rate and there's more flexibility there, and so you don't have to go through intermediary like Plastiq to pay from PLOC. Now, I think best would be Heloc because it has the lowest interest rates out of all the tools, and you're going to normally get higher limits, right? So you want the tool that's going to give you the lowest rates or the lowest interest rates and higher limits, so you have more to work with. So here if we scroll down here, one thing I do want to mention is that certain cards have limits. So you do have to review terms and conditions. So if you go to the Plastiq website right here, just do a Google search, you should be able to see this article, supported payments by card brand. So each card brand has a policy of what you can or you cannot do. And there's this PDF right here. I actually have it open. So here you can see that they make a distinction between Discover, MasterCard, Visa, and those are the big three ones. I don't see Amex here, although I thought I saw Amex. Maybe Amex is even supported by Plastiq anymore. Um, So if you look here, and then they also make a difference between debit and credit. So there's some restrictions there as well. So if we scroll all the way down, we should be able to see a section for mortgage and HELOCs. So you can see right here, rent and real estate. You can pay mortgage and HELOC. And so you'll see that this is actually covered in all situations except for this one. So let's see what that is. So as of right now, Visa credit does not allow you to pay off your mortgage. So you're going to have to use a Discover or a MasterCard. So it's something good to be aware of. All right, excellent. So you can see that there's certain terms and restrictions. You can't use all your cards. It's not going to be ideal because it's like almost playing a balance transfer. But let's just kind of take a quick look of how we can calculate if it's worth it or not. So let's say I have a $255,000 mortgage. I get it at a 6% interest rate, which is pretty good nowadays since I think mortgage rates are like 7, 8. But let's say you got a 6% interest rate, right? So now you could just kind of do what I did, where you just kind of paid in $3,500 chunks. It doesn't have to be that big to get the savings in the mortgage. So I did like 3,500 here, 3,500 there. I actually did it month to month, but because I was testing with lower limits, just because I was scared, like, what if something happens to my money? But it's all good. So let's say I do a chunk right here. So instead of paying the 1,528, I pay 3,500, and actually it's a 3,500 additional principal payment. If you take a look at this, so it says apply to payment only to principal. So I think what happened was that I paid probably out of my checking or something like that, and then I paid the rest through credit card just to see what we can do. But again, your strategy may be different, but it's almost the same effect if you're doing it that way. So I'm just going to put 3,500 to principal, and then 3,500 to principal next month. So as you can see here, if I apply two payments like I did here of 3,500 to that credit card, kind of like December 13th. So this is just within a 1 month span almost. And again, I'm approximating here. So you know, if you see some errors in my math, you know, I'm probably aware that I am making some simple errors, but it should be close enough. You could see that I saved 32,000, right? So would it be worth it? So let's just go back here. Would it be worth it to pay $200 to save $32,000? I would. I think that's a good idea, and then you might get most of it back if you have like a cash rewards program with the credit card. Again, check with your credit card company, but most of it is kind of a wash, and so you will have to pay some fees. But again, take a look at what happened. We saved about $32,000 in this hypothetical scenario, right? And so if all I did is just make these two payments and never did it again, then you know, wow, this is amazing, right? And so, yeah, so this is how essentially you would pay or overpay your mortgage with Plastiq. I think in the instructions, you would just write like put a copy of your mortgage statement and then tell them what you want to apply to the principal versus the regular monthly payment only, or what should be applied. Again, speak with your mortgage company. Maybe just do some test payments. So like I did here, I was a little bit scared to pay with my credit card because I don't know who else paid with a credit card. And then later on, I felt a little bit more comfortable just say, okay, apply this to principal, apply this to principal, right? And so I did that, and I got a net effect right here. Now later on, once you get even a better tool like a PLOC or a HELOC, just use that. You don't need to use a credit card and pay the 2% fee or whatever just to make a mortgage payment with the line of credit. Just get a 0% fee to use the money, and the only interest you would pay is anything that's applicable at the time that you're using the money, and then you just pay it back, and then use the strategy to pay off your HELOC or line of credit so that you can just do it over and over again, rinse and repeat. And if you have no idea what I'm talking about, go ahead and click the link below to the Velocity Making 101 and 102 videos. Okay, all right, so this is how we would use Plastiq or Plastiq with a Q.com to pay off to make mortgage payments. It's relatively simple. You'll usually have to upload documentation, which is usually the statement of the mortgage, and then use a credit card that supports such a transaction, and Plastiq has a guide for that. and then you should be good to go. And then you just do the calculation, see, am I losing money, making money, saving money? And then you'll know that if this is the right strategy for you. Okay, all right. Have a great day, everybody. If you're interested in joining our group, Korean Atlanta Mentorship, go ahead and click the link below to use the Google form and submit, or you could just email us by finding out our email in the About section of the YouTube channel. All right, have a great day, everybody, and we will speak soon.